How's it going, everybody? Oh, my volume is up.
Look, I'm over here talking on mute. I'm over here talking on mute.
Okay.
Look at y'all with these pretty pictures on y'all little screensaver thing.
Come on
Y'all
now.
gotta stop showing out. I love when people show out. I'm just saying, I love when people show out.
Ain't nothing wrong with it.
Hey, Tyler. Hey, Brandy. Hey, Esty, Tangeray. Yeah, I ain't been out the house today. I still got my pajamas on from yesterday. But that's the luxury of working at home.
Talk about it.
Okay, because I got a lot of work done today, y'all. Now, I got a lot of work done. But when I say I ain't showered nor shaved, okay?
Honey.
And brush my teeth. I brushed my teeth and I combed my hair. And I'm sad to say I had 3 meetings today and I took them just like this.
It be like that sometimes.
So if y'all know any of those sites that have those pajamas that look like clothes with the fur collar and stuff, send it to me. That's what I'm looking for.
Okay, I'm taking note.
Look, I came on here to solicit help from y'all because it's Camilla's day. But I came to solicit help. I saw this girl, she had on what looked like was a fancy outfit. And when she put in that chat that it was her pajamas,
Wow.
I was trying to get to type the message in the chat fast enough, and she had already went offline. So if y'all know where I find them pajamas at, please let me know. I got the little 2-piece joggers. Y'all nobody sleep in that mess. I need a robe or something that, my robe look like a regular robe, y'all. Help a sister out. I'm just saying, if y'all see something, think of me, because this winter time, and I'm going to be in the house.
That's right.
It was 30 degrees yesterday. I ain't going out there in that. Help a sister out, okay?
I made a note.
That's all I'm saying. All right, I'm gonna go live on Facebook. Cherie, listen at me, Cherie. I'm looking at Cherie's picture. Camilla, you get us going.
All right.
And I'm gonna go on mute. But it's so good to see y'all. I had a little message for y'all today. I was supposed to go live, and then my sister called, and I didn't get to go live because she was in an uproar. And I was like, Lord Jesus, just bless me right now, because that wasn't blessing me. So I didn't get to go live. So I might go live after the session today.
All right. Okay, it should let us know when we are live in Facebook. There we go. Got it. Good. And Tangeray, we hope you feeling better.
Thank y'all for y'all well wishes, y'all prayers. I feel a lot better, just trying to get this energy back up.
Get you one of those, they got these little trampoline thingies, little small trampolines. Like literally I'm standing at the little stand-up desk. I saw that, I was like, oh yeah, that's gonna help, get your little trampoline and the stand-up desk, be up here bouncing and taking your calls, and that energy just start to flow and start to going, because we all need it. Yes, and I'm feeling better as well. So thank God for that. I hope everybody had a great family gathering, family time, holiday time, and holiday season. Hope all was well. Hope everybody didn't eat too much, but ate enough, right? Everybody had a good family gathering, ate a lot of good food. Awesome. All right, let me go ahead and start sharing. We're going to get right into it tonight. For this session. We're going to talk about some wealth strategies tonight. We're going to talk about some tax planning. SEC, I need to undo the eating. I did, honey. Okay. Honey, all of us, we're just repenting all over the place, huh? Yeah, we're going to talk about some tax planning strategies tonight because it's 32 days. We got one more day in this month and 31 days in December. So 2024 is, it's approaching us very quickly. And so we got a whole 32 days to change our tax situation. It's not too late. December 31st, midnight is when it's too late, right? So we got a whole 32 days to change our tax situation, and get some wealth strategies in place before the new year. So we're going to go ahead and get into it. Share my screen. And right, I think we're sharing now. And get into some tax strategies. Some of this will be a review, but for some that has not seen it, we're going to get into some more. Of course, we always have questions and answers. It's a little more intimate, so we can kind of take our time and break this stuff down and really understand where we are. Like, how many people feel confident on a scale of 1 to 10? 10 being your most confident, 1 being your least confident, about tax season, tax time. How many of us are confident, like, I'm ready for this, I know what it's going to be? And for those that like, child, I don't know what's going on right now. Give me some 1, 2, 3, 4, 5, 6, 7, 8, 9, 10s in the chats. Most people like 1. Most people are like 1. And that probably stems a lot from awesome. Dr. D's a little over half. She's 60%, and she is feeling good. She's following some directions and instructions, and now she's praying also. And it's probably because for a lot of us, we don't talk about tax planning. Like, tax planning is new for me too. It's been introduced to me a couple of years now, and we don't hear much about planning for taxes. We hear about either paying for taxes, or we hear about getting a refund, just having someone to prepare our taxes before April 15th, 18th, or whenever that year's deadline is. But there's a whole nother realm out there. We're about to come into, a whole lot of money. We get these contracts, we're doing all these different things, multiple streams of income. Like, when you work like that and put the time and the effort into making this money, now we got to keep Uncle Sam's hands off of it, right? So we got to start planning in advance about how we're going to strategize to keep this money, like what we're going to do with this money when we get it. Because if you don't have a plan, money always need a mission, right? Money needs a mission and money needs a plan. Like, if you don't have a plan for your money, other people do. Other people will plan for your money too. If we don't actually sit down and have to think about this, like my husband and I, we had to sit down and have a whole conversation. Like, okay, these are the things we know. We know what we want to do as the money is coming in. And you need to have that plan, because you might just, hey, just take a big vacation or do something, whatever your plan is, but you want to have a strategy and have a written plan for it, not just one in your head either, like a written plan as to what we're going to do with this money, and more in particular, with the tax part of it, because Uncle Sam wants his cut, for sure. Money needs a mission, right? Give it a mission. Give it something to do. Give it somewhere to go. Let's get right into it. So the objectives tonight, we're going to look at business entities and structures, getting organized, right? Because we have to plan for success. Like, I think the saying goes something like, when preparedness meets opportunity, that's success, right? So we have to be prepared, because once we get into 2024, like once we literally cross over, like it's nothing on a large trajectory scale that we're going to be able to do as tax preparers or tax strategists to really make a huge difference, right? We can do all that we can within the deductions, the credits, the allowances, and things that you're able to get. But had we known that, hey, you needed a car, if we sat down previously, earlier this year, and we know you needed a car for your business, that's just one strategy. That's just one thing we could have sat down and talked about, or if you needed it or not, but if that was going to make sense to help offset your taxes, I tell people, you either give it to Uncle Sam, or you put it in your retirement plan, or you purchase another vehicle or some equipment, or you give to a charity. You do anything except give it to them, right? They don't need it. They have an $11 billion budget. I think they're doing okay. Okay. So really understanding the difference between tax preparation and tax planning, talking about different strategies and how we get those deductions. What are the codes? Like, there's a whole book, 70,000 pages of codes, right? It's just too much, right? The average person is probably going to use about 7 to 8 codes per year to really maximize, their strategies. But there's a whole tax code book out there with nothing but codes in them. And ultimately, we want to pay the least, if anything at all, legally in taxes. Okay, so looking at our structures, just put all of them up there, because the way we structure our business is going to be the foundation. It's going to be the foundation of how we're taxed, right? So as a sole proprietor, that's one of the greatest tax liabilities. And also, it's not a good way to build wealth, because 100% of the liability belongs to you when you are a sole proprietor. All the debt is yours. Anytime somebody want to sue you or anything like that, there's no protection around you. It goes straight to you, right? And so, and you're also paying 15.3% self-employment tax as a sole proprietor. So this is definitely not the way to build super wealth, right? So then, to take it a couple steps up, notch up or so, we begin to put some protection around our company, which why it's called a limited liability company, right? There's 2 types of liability companies: single member and a multi-member. Okay, maybe 5 years now, could have been a little longer, the IRS did some changes with the single member LLC, and they said that if you're a single member LLC, if it's just you, they're still going to treat you like you are a sole proprietor for tax purposes only. IRS only deals with the tax side. If you are LLC, you still a single member LLC, you still have your protections, your asset protection, your liability protection, but just for tax purposes, the IRS still say you are a sole proprietor, okay? And this is why you have to file your single member LLC taxes along with your personal taxes on a Schedule C, okay? These 2 are not done separate. I have clients come to me and they'll say, well, I already filed with my spouse on my personal, I just need to file my business. Okay, what kind of business do you have? Do you have are you taxed as an S Corp or you're a corporation? No, I'm an LLC. Okay, are you a single member or a multi-member? It's just me. So they're a single member. So now what that looks like, we have to go back and do an amendment to their 1040, their regular personal taxes, because they just missed out on a whole bunch of deductions and credits and things because they were thinking their business and their personal has to be separate. Not yet, not at this level. You're still filing your personal taxes along with your single member LLC. Okay, so you do begin to obtain some wealth here because you're protecting yourself from liabilities, and you're protecting your assets like your home and things of that nature. But it is still very important that you separate, even though you're filing them together for IRS purposes, you still want to keep your business separate from the way you operate it. Keep it separate from your personal, like having your own bank account, you know, personal and business, separating those things out. As you're growing, getting as many as your bills, even so, in your business name, like our utilities, our like internet things, little small things like that, that you can get in your business name. As much as possible, get some of those things in your business name as well, to just put you want to kind of protect, because your business is its own entity. It's a shell, right? It protects, and that's what a shell does with a nut, right? It protects that nut on the inside. And that's what our entity as an LLC does for us. It protects us. And so the more things you can start putting into the business's name, then that liability comes off of you, right? And it's onto the business. So that's a nugget there. As many as you can. And while I'm there, this is coming to me. Once you get those things in your business name, then you're then able to report those things on your business credit. Okay, because it's a business expenses in your business's name. There's a company out there called eCredible and Red Spectrum, eCredible and Red Spectrum, that will allow you. I think we reported like 7 of our business expenses, you know, like they're personal and business expenses, but they're in our business's name. And so we're able to report those on our business credit as well. Again, like our internet, our utilities, our water, our insurances, things of that nature. And even sometimes they'll let you report it on your business credit, even when it's not in your business's name, but you're using it for business purposes. So look into those 2 companies, because they will allow you to report those things to your business credit. And then you won't have, it's something you're already paying for. You're not going out and getting a net 30 or getting anything like that. These are bills that you already have to pay every month. So why not have them reported? Okay. All right. So the other type of LLC is the multi-member. Multi-member is when you start to do things differently tax-wise. Okay. Now that you have 2 members, at this point, you absolutely need an operating agreement. It's good to have it as a single, but definitely when 2 or more people are involved, you want to have that operating agreement, because you want to be able to say who's bringing what to the table, what's that percentage, what does that look like, and then what does the profit percentage look like? What was the loss percentage look like? So those things have to be spelled out in an operating agreement once you have 2 or more members, okay? For IRS purposes, you are treated as a partnership, as a multi-member LLC, okay? You're a partnership, but you're not a partnership, but that's how they're taxing you for tax purposes, okay? You can still elect to be a SRC Corp, taxed as a C Corp, as a multi-member LLC. Also with a single member, you still can be taxed as an S Corp there too. You just have to file the appropriate forms, which is Form 2553, to make those changes. Now you go from filing a 1040, right, and a Schedule C to now you're only filing the 1065. That's your business return. Okay. Do we have any multi-member LLC companies? Anybody have a multi-member? Put a 1 in the chat if you have single member, put a 2 in the chat if you have multi-member. Single members, okay. All right, so we have single members. So yes, so you all are fine, because multi-members, when you have to do the filing in March for your business and by April for personal. And what happens is, if Chanel and I are in a multi-member LLC together, then Chanel's profit, what she, her profit, we say we split it 50-50. So whatever her profit is, the company is going to send her a K1, right? That's going to say in detail what her expenses were, what she profit, what she made, right? Her K1 will have all that on there. My K1 will have the same thing on there. Chanel then has to take her K1 and file that with her personal taxes. Okay. The same way that K1 is used to offset any other income she has. Okay. She made 200,000 with the school or something like that. So she can still take that K1, those expenses and everything that she made from the business, and offset the her W-2 income. So it works the same way, but now we have to split things up, because you can have hundreds of members, right? We're just talking about 2 members, but you can have hundreds of members, but it will work the same. They all will get K1s, and they will have to file those onto their personal taxes. So this is considered a pass-through entity, right? You're just filing that information 1065 and get your K1, and then you file it with your personal taxes. And an S Corp kind of works the same way. Okay. So again, an S Corp pretty much kind of work the same way. It is also another pass-through entity. You're now filing 1120S, and that same idea, instead of being members now, like in an LLC, as an S Corp, you have shareholders. So the terminology changes. So each shareholder, see, all of us can be shareholders, right, in that company, and we all will receive K1s to file on our personal taxes. That's how an S Corp works, okay? The beauty about an S Corp, and one of the main reasons why people go from LLC to S Corp, we talked about that 15.3% self-employment tax. Well, that goes away as an S Corp, right? As an S Corp, there's no more self-employment tax. All you have to do is pay yourself a reasonable salary, and the rest can be tax-free distributions. There's no self-employment or SE taxes, right? Self-employment taxes on distributions. So if you made $500,000 in 2023 and you're S Corp, you have to ask yourself, or being taxed as an S Corp, you have to ask yourself, what's a reasonable salary for what I'm doing? I'm CEO of an education firm. What is, you may have to do your research and see what others are being paid, but you ask yourself, what's a reasonable salary to pay myself? Is it 50%? Is it 60%? Is it 75%? Whatever it is, that's the salary you pay, and you only pay like your federal taxes and things like that on your salary, but the distributions absolutely pass through your company tax-free. Okay, so that's the lucrative side to this. Some people like to do 50-50, 50-60, or 60-40, or 70-30 or whatever the case is, but you have to do your research and find out, what's a reasonable salary. That's all the IRS says, a reasonable salary, all right? So this is a definite way to save taxes and build wealth substantially, because you can send a whole lot of money. You can send $250,000 in that example that I just used, tax-free through your business. You pay taxes on the $250,000, which is your salary, but you pay nothing on that $250,000 for the distribution. That makes sense? Put some ones in the chat if that makes sense for me. Awesome, awesome, awesome. That's why people want to be taxed as an S Corp. And you have to, once you begin to use it, S Corp election, you have to stick with that for 5 years. Is that distribution allowed to back to your and senior leaders in your company? Cherie, you can come off if you can and ask that question for me.
My question is, so you said that then there's $250,000 left per se that can be used as distributions. Can that distribution now come back to you as like an executive bonus and any of the senior leaders that you have in your company?
You can absolutely do whatever you want with those distributions. Absolutely. Absolutely. They can, most people are just, just themselves in the company, but if it's just you, then those distributions are going to you. But if you have other teammates, you have employees and you want to, give them some extra for the year, you can do absolutely whatever you want to do with those distributions.
So that full $250,000 could just come back to me?
100%.
Where have you been
100%.
all my life?
100%. And that's why that whole reasonable salary thing is the whole deal. What is a reasonable salary? What do I pay myself? Because that's the only part you're going to be paying the federal taxes on is that reasonable salary versus a whole 15.3% coming off of $500,000, right? That's a lot of money. It's a lot of money. Yes, ma'am. Good question. Where does the 250 get filed? All this is going to show up on your K1, right? So on your K1, it's going to show your salary, because you're going to have a W-2, like you got to be payrolled, you get, W-2, all that kind of good stuff. All this is going to show up on the K1, right? So you're filing that onto your personal taxes with your K1. If that answers your question. Where does it get filed on her tax return? You take that K1 that all the shareholders are going to get, and you file that onto your personal taxes. There's a space, there's a form, once you're S Corp, there's a form on there, and there's a space there where your K1 will go, and your tax preparer will fill that out on your personal taxes. Great questions. Okay. All right. So getting organized. Got to be ready. Got to be ready for the opportunities that are coming. Now I asked about how many people are confident. How many people are organized and ready? Organized and ready. I don't know if that can be the same thing, but how many of us are organized? We got our stuff together, even if we don't know what's going on. All of those things. Okay, so 1 to 10. Let me see. 10 for very over the top organized. 1 is like, I got some work to do. Give me a 1 to 10 on the organization. Where are you with your software and tracking your expenses and tracking your mileage? You got your receipts together. Let me tell y'all, I'm about a 7 myself, because I kind of wait towards the end of the year to file my taxes anyway, because I file everybody else's throughout the year. But you got your software. Okay, I see some 3s, some 4s, some Okay, so that's better than earlier. Good, good. And if you got QuickBooks, everything is in there, like your receipts. You know, you can have your receipts in there. You can track your mileage in there, connect all your cards. Yes, that's the part, Esther. You got to go in and organize them and categorize those expenses until the system starts to, because the system is going to start picking up your spending habits. Because we pretty much spend financial 5-minute Fridays. There you go. Take some time each week, set that timer. And when you're on your phone, I like to do it on my phone because it don't take that long. Like it seemed like you got 90, 100, expenses to categorize. But once I get on my phone and start categorizing, it's 30 minutes. I have that stuff done in no time. So take that time, set some time aside to do that once a week, twice a month, or whatever, depending on your spending. But the AI will begin to pick up our spending habits, like, because we pretty much do a lot of the same things. We're paying a lot of the same bills. So they will start picking up a lot of that stuff, and we'll have less corrections to make. Once we continue to do it for a while, they'll start picking it up. But in the beginning, we do got to get in there and give them something to work with and kind of start categorizing those things. Yes, start with 15 minutes, but after a while, about 5 minutes weekly. Yep, because it will learn your behavior. And once it learns your behavior, it's not going to take that long. Okay. Because I can recall, I said, Francois, you got to do this, honey, because I can't do this. It was just too much when we first put everything in there. And so, but yes, getting organized, getting all those things in place, because that's what's going to, make it so much easier to transfer everything over to your tax preparer, your tax strategist, because your accountant, because you can just print a report, send them income and expense reports, send them all those things, because it's already there in one place. Okay. Connect all your cards that you use for business, put everything in there, all the ways that you're spending. Connect your Square, connect your Stripe, connect those things to it as well. And however you're accepting payments and things of that nature is going to capture all of those things. Okay. So we got get organized. We got 32 days left, right? For the new year anyway. Okay. So the difference in tax preparation and tax planning, right? So we can read and see the definition for those things. But essentially, with tax preparation, IRS calls that compliance, tax compliance, right? That just simply means that's something you have to get done. It's a compliance thing. Everybody got to file those taxes, right? And so that's really what an accountant or CPA or somebody, that's what they do. They're going to do your taxes. They're going to make sure you're filed on time. They're going to prepare, calculate your returns, things of that nature, right? That's what your typical tax preparer, accountant, CPA will do. They're going to file and prepare your taxes. Okay. They're not necessarily going to be digging into a whole lot of, well, what do you do? Last year, did you do this last year? No, you give them some documents. They're going to put those documents in there. They're going to give you a return. I did one young lady return kind of late in the year, October. Yes, it was last month. And she was about to have someone do her taxes who've been doing them for a long time prior to her going into business. And some tax preparers, they're just good at doing personal taxes. They're not, that may be not their strong point. That may be not what their niche market is, into business. And so she said she was going to get a $3,000 return is what the lady quoted her, kind of gave her some numbers, estimates. I said, well, that don't sound right because you now have a business. And I know some of the expenses that you've been, expending, And so I said, well, I'll tell you what I'll do before she does your taxes, just send me over everything that you already sent her. Just let me take a look, because she's asking you for documents that's not even the type of business that you are a part. I mean, you're not even an S corp, so I don't know why she's asking about XYZ. And so she sent me the documents. I took a day or so and was looking over them. Well, her refund went from $3,000 to $16,000. $16,000. Who do you think she let prepare her taxes? Somebody put in the chat, was it me or the other lady? Was it me or the other lady? And I said, honey, you just overpaid in taxes and all you're doing is getting your money back. Like, you overpaid big time in taxes. And now that you have this new baby, called a business, there's some things that's going to offset those taxes that you already paid, and you're going to get a lot of this money back, right? You gave a free loan to the government for the year, but you're going to get this money back. And she got over $16,000 back from that. And she was like, oh, it's gonna, be hard, because she was working with this lady. I said, baby, this business right here, this business. So she was able to switch over all that and all that. But I said that to say an average tax preparer is not going to do that. They're not going to just dig into your life and find out different things about, your life. But that's kind of what tax planning is. And it's also getting ahead, okay? Getting ahead of things, not just looking back at 2023, because that's tax prep. Okay, tax planning is going to be looking at 2024, right? Because 2023 is gone pretty much. And so tax planning is going to look like sitting with a tax strategist 3-4 times a year, once a quarter, going over a plan, right? Coming up with a plan, showing you at the top of the year, based on this plan, you can save 50 grand in taxes. We can help you save 50 grand in taxes this year, right? We've had clients like that. And so showing them the plan, software spitting it out, showing them in writing, like, this is the plan, right? And then taking that year in 2024 to actually execute the plan, right? Because you can have a plan, but until you execute that plan, it ain't nothing but a hope, a wish, and a dream. And so we give our clients the options to, we can work with you to execute that plan, or you can pay us for the plan, take that plan to your CPA, your accountant, your tax person, and let them help you execute that throughout the year. But either way it goes, you now have a plan, a roadmap. These are the things that I need to do in 2024 in order to not pay $50,000 in taxes in 2025. That's tax planning. Okay, because now I'm getting ahead. I'm looking at I'm avoiding at all costs paying taxes to the IRS. I'm strategically, okay, creating a plan to reduce my taxes. So if we know we're going to be going to Cabo's in June, okay, how can we strategically how can this be a business? How can we make this a business trip, right? What can we do to make this a business trip? Different things, like that's when we get into your life. We talk about what's your plans for 2024. What do you want to do? Talk about you and your family's life. What are your goals? What are things you want to do? All of those things. And we put those into our system, and the system is going to come up with a plan and say, you need to maybe maximize your retirement, because you're not taking advantage of that. It's going to spit out like 10, 12, 15 different strategies that we need to look at for you based on a long questionnaire, like about you, your life, and your family. And it's going to definitely let you know how we can help you reduce those taxes. So, y'all know in the vision planning session Saturday, you will know. Absolutely. It's about planning. It's about preparing. I need it. We paid. My goodness. Well, 2 years ago was pretty good because that's still within 3 years, Nicole. Long as you're within 3 years, it's still something you can do about it. All is not lost yet, right? But that's when that organization is going to have to come in. Like you have expenses and things already. That is huge. That is a lot. You know, you got your documentation. You know what you were doing in those 2 years. Like someone just told me, she called me upset once I told her about the 179 deduction, and she said, I purchased a car, I purchased a whole truck. Like that truck, like 7,000 pounds, something 7,000 pounds. I purchased a whole truck in 2021, and the only thing that was my tax preparer deducted was the taxes I paid on the car, the property taxes. I said, well, that's probably what she knew to do. You know, most tax preparers, they're not going to go in depth that way. So definitely, absolutely, Dr. Cole, you still have an opportunity, because if it's been 2 years, you can go back 3 years and amend and change anything. Send additional documents in, send some more expenses in. Now, as far as strategies and things of that nature, we can't go back and do anything like that. But if you have additional expenses or things you might have overlooked or anything like that, you can always go back and send additional things like that. We took money out of hubby's pension to build our home 4 years ago, and it busted our butts. Wow. Yes. So that's a whole conversation right there, Dr. Nicole. Whole conversation. So that's tax planning and tax prep in a nutshell. Like there's a huge difference in them, you know, in the two. Okay. So a few strategies that we'll talk about today. I already mentioned, maximizing. Who would have thought just maximizing your retirement fund, right, was a strategy? But remember, that's tax-free money. You know, that money is going to come out before any taxes go in it or taken out of it. And then that money is going to go into your future, right? So I tell people, even though it's coming out of your money now, it's going into your future. And that's better than going into Uncle Sam's bank account. Okay, so that's a strategy by itself. Our children can have retirement accounts, and we can maximize those, you know. So changing our entity from LLC to S Corp, huge strategy. Section 179 deduction, we're going to look at that. Hiring your children in your business, huge. The Augusta rule, we're going to break that down. Easily 75,000 in potential savings, right? Okay, so changing your legal structure. Let's look at that. Like Cherie mentioned it earlier, like she need that S Corp in her life, because that structure is going to save her a whole lot of, like they say, a whole lot of money, right? Just that distribution alone, she's going to be able to keep in her pocket after she give herself a reasonable salary. So we could be in the wrong legal business structure and paying unnecessary taxes. Okay, so a lot of people ask when Dr. D said, Cherie, did you do your vehicle through the Section 179? So did you get credit? Did you get any deductions? And it's actually the depreciation on it, right? And when you couple 179 with the bonus depreciation, that's what allow you to write off that car in its entirety if you use it 100% for business, if you bought it in the year that it was the year of the tax year and placed it in business, and if it's over 6,000 pounds. Okay. You say years ago when I purchased it, paid in full, I need to purchase a new car. That's a whole strategy for 2024. Whole strategy right there. Or if you still want to purchase it.
So, you know what keeps going in you keep saying that it needs to be a certain pounds. Like, I'm not understanding.
Yeah. It's right over here. So
What
with
does that mean?
So
Like, it can't be a sedan, it has to be a SUV or.
to get the full car written off, when you couple 179 with bonus depreciation, if the car is over, per IRS codes, right? If it's over 6,000 pounds, then you can write off the entire car. Not that you can't get any depreciation dollars if it's less than 6,000 pounds, but that's the way you can get the entire amount, like a $80,000, $90,000, $100,000 vehicle. You can write the whole thing off if you want in 1 year. Now, if it's less than 6,000 pounds, what you have to do then, over 5 years, you have to break it up over 5 years, right? So let's say the amount, this is still $50,000 out there, and now you have to break that up into 5 years. You can only deduct $10,000 a year for the next 5 years. That's if it's under 6,000 pounds. Yes, that's the key. 6,000 pounds. We need cars bad, but having a hard time understanding how to do it. Okay, so we can definitely have a conversation, Dr. Nicole. I don't know who buying cars still in December, but you still got time if you need to buy a car this year for 2023. But that's definitely something in 2024. That's a whole strategy right there. But again, when you go to look at that car, when you open that door, right down in the doorway, you'll see, it'll tell you what that gross weight rating is, what the weight of that car is. Okay. And if it's over 6,000, that's the vehicle you want. Also, you can go on Google and just Google Section 179 deduction vehicles. And there's going to be a list that comes up to tell you the different types of heavyweight vehicles that qualifies for the deduction. Okay. But yeah, all cars depreciate. Thus, you can get depreciation dollars for them. It's just a matter of how much and how long, depending on, thank you, Tangeray. And Cherie, yep, this is vehicles over 6,000 pounds. Yes, so that's what determines how much and how long you get to depreciate that particular vehicle. Okay, so let me go back to, so we're talking about the legal structure. So yeah, once your net income, like after you paid your, after your expenses, what did you have left? If it's over 50, 60K, then you want to go ahead and start looking at switching over to being taxed as an S corp. Okay, because that's when it's going to start to make sense for you, because it is going to be some other things you have to do, like get on payroll and things of that nature. So it would definitely make sense at that point to do so, because you will no longer be paying that 15.3%. Okay, and we can determine that and help you determine that strategy as well. Okay, so we basically just talked about the 179 deduction. And it's not just vehicles, right? Machinery, large, huge equipment. There's different types of businesses and entities that has, they have to buy, like even a dental office. They have to buy these huge machines, doctor's office buy these big machines. all those things will fall under section 179. So it's not just vehicles, any equipment. Like one guy wrote off a furnace he bought for his business. So any type of equipment, furniture, vehicles, anything, you can write that off. On Facebook, the teacher wants to know, art and bonuses part of income. Okay, bonuses are part of income. Art and bonuses are part of income. Okay, so she got a bonus. Yeah, so in that sense of your employer gave you a bonus, all that is a part of your income. If you mean like for tax purposes, like all that's income. Every piece of money you get coming into you is going to be income, considered income, if that's the question being asked. Okay, for Dr. Nicole, I haven't made one red cent. How can I purchase a car under my business name? Well, you can do that a couple ways. You can build business credit under your business name. They don't ask you, they don't even ask you for your social security number. When you go in and you ask to speak to a commercial fleet manager, not the little salespeople that come to greet you at the door. No, you got to ask for a commercial fleet manager. You want to speak to the manager. And when you speak to them and you let them know you want to purchase a vehicle in your business name only, right? And so this is after you've built some business credit under your business name. You're going to need about maybe 6 to 10 trade lines, at least $5,000. This is just one example, one company requirements, at least $5,000 in business credit under your business name, right? You want to have business credit running through all 3 of the business bureaus. And when you go in there, they're not asking you, it's a stated amount. They're not asking you for any documents, right? Only thing we showed was a driver's license. Didn't ask for social security or anything like that. So as long as you have some business credit under your business's name, you're going to write a stated amount as to what you expect to make in your business on that application. And they're going to run it through, just like that. So there's plenty of ways you can get your business vehicle in your name. And even if you did not purchase it in your name, you still can write it off and still get the 179 deduction credit. It doesn't have to be in your business name to get the deduction. Okay. IRS understands that most business owners, they start off everything personal. Like you might start off with a personal everything when you're just getting started. So it can be in your name or your business's name. It could be used. It doesn't have to be a new vehicle, right? It could be finance is what I'm saying. You don't have to pay it in full. It don't have to be brand spanking new. It can be a couple years old or whatever have you, and you can still get the deduction. Yes, I wanted it this year for the write-off. Yeah. So you got 32 days. I don't know what can happen in 32 days.
Can I come off of can I say something?
Sure.
Okay, so I was trying to basically refinance, do some things, move some stuff around. And but I don't know what in the world is going on. I'm not sure if anybody tried to buy a car lately, but it's almost like paying for a doggone house note. I'm like, that's utterly ridiculous what they want. So I said, well, let me try to do it under the business, but I didn't understand the right strategies to use. So I called myself, let me just refinance and then, just get me a loan from Navy Federal so I can just go with my check and pay for the car right off. But they were still doing some crazy astronaut. I'm not about to triple my mortgage for no doggone car. to pay, to get, like, if I wanted to get it $60,000.
Mhm.
You know what I mean? So I'm like, I know I'm doing something wrong. I can't figure it out. I thought I was doing it the right way. You know what I mean? Going and getting a pre-approved, but I just refuse to spend all that money. You get what I'm saying? I refuse to spend
Yeah.
all that money.
Yeah, yeah.
The interest rates and all that stuff.
All interest rates are up right now. There's a shortage, it's a seller's market all around, cars, homes, everything. So definitely that's why the business credit route is the better route right now, because they're going to give you like a fixed rate. It's going to be more elevated than it would if you were going and using like a 800 credit score or something like that. They quote us like 10%, 10%, but you're talking about no docs. Like you showed them nothing but an ID and you walked in there and wrote some stuff down on a paper, they're taking all the risk. So 10% when they're taking all the risks is not bad.
Right. It was like almost close to 8%. And they wanted me to still pay like $1,000. And I'm like, And then if I rolled it into like a mortgage, trying to do it that way, I mean, like not a mortgage, get a couple of dollars here and there.
Yeah.
I mean, they wanted me, I paid 38 and some change for a mortgage. Now they wanted me to go up to 53. I'm very comfortable with the 38. I'm not comfortable with something happened with me going to 53, not for no ride, putting it in there and paying off no credit cards. Oh, absolutely not.
No, it's a better way. Right. 60,000 a lot, and with interest rate, yes. And I did no docs. Absolutely. No docs is definitely a better way to do that. So may have to just take some time and build up your business credit and do that route. And yeah, it's definitely 1,000 for a 60K car note. Yeah. Now through the business credit, because it's up to you. It's up to you if you want to put down payment, but they wasn't asking us for no down payment or anything. But because a lot of people making it bad for others, and a lot of people, they're going and getting fleets of cars. Fleets. When I say fleets, they get 4, 5, 6 cars one time running that business credit and not paying. So the guy, he was real open with us. He was like a lot of people are not paying these they're getting these cars in their business name and they're not paying them. And so that's when they started like, we're going to have to ask for some type of down payments, kind of weed some of these people out. That's when they start with like a lot of down payments. But in the beginning, they wasn't asking for no down payments at all. And that was like 21 and 22, kind of going that way. But we can definitely have a conversation on that, Dr. Nicole. Okay. So talking about the 6,000 pounds there, most people don't take the depreciations, even for our homes, right? Now, if you got a rental property, that whole house is depreciable. Like you can do depreciation on that just like you can with a car. But even on the home that your personal residence, right? You can still depreciate the portion of the home where you do business, just like you do your home office business deduction. Like that percentage can also go towards depreciating off of your home, and it's overlooked, right? That's an overlooked strategy. So it's so many places that we can miss getting those deductions and stuff like that. But please, if you got a couple sections in your house, like you can get those areas, the depreciation off of those areas as well. Okay. And this is what Cherie was asking about. If the car is less than 6,000 pounds, then that's when you have to take that deduction over either 5 to 7 years. Most people want it in 5 because you get more deduction. All right. That's the one I use the most. 5 years. Okay. Hiring your children and or your grandchildren, right? So the rule just says they have to be 8 to 17, but of course there's always exceptions to rules because you got children at 2, 3 years old, they're modeling, they're making money, they're in a business. Tandra said, somebody let me borrow a kid. you know, and the standard deduction, you get to deduct 13,850 per child, right? That's the standard deduction. So that's the max you can pay them, is what it's saying. So who not gonna max that child out? Max them out, the whole 13, and you got 3, 4 kids. That's a nice deduction right there in itself. Okay. But they have to be on payroll. They have to have their own little bank accounts. They got to be W-2 annually. You put them on payroll. You just send that money to their bank account. But guess who in control of the bank account? You know, if the child is of that age, you know, depending on the age of the child. If they're 8, 9, 10, of course, you're going to be in charge of that bank account. So, and of course, it has to be age appropriate with whatever it is that they're doing in the business. But trust, when Kenzie gets 7, 800, I'm already putting her to work, but be able to pay her for it after a while. So, yes, they will have to, you have to put them on payroll, do the W-2 whole thing. It gotta be, yeah, that's your paper trail. That's how you cover your bases. But it could be worth it if you do the numbers and put it out there. If you already got a payroll system set up, you know, write a little job description, send them a W-2 every year. It could be worth it. If you got a couple kids, 3, 4 kids, it'd be worth it. Okay.
Sorry, I just have a question.
Sure.
How much, so do you have to pay them in excess of the $13,850, or can you pay them less and that's just what you get as a deduction?
Great question. So because the standard deduction is 13,850, that's the max per year you can pay them, because that's the max deduction you're going to get. Right? That's
So
the
deduction equates to what you pay?
Well, because if you pay more, you're not getting a deduction for it.
Right. So in order to get so whatever you pay them is the deduction you get back, minus the fact that it can't go over 13,850.
Correct.
Gotcha. Thank you.
You're welcome. Yes, ma'am. Okay, so Section 280A, Augusta rule, this is something we all can do, right? Because this rule simply says that we can use our primary residence, not like a rental property or anything like that, but we can use our home instead of, the Augusta rule. Augusta, they make it super easy, Chanel says. Yes, and Augusta rule does apply to apartments. Wherever your homestead is, wherever wherever you live, you can actually use your place instead of renting out a space. They just want you to find at least 3 places, and all this have to be documented. Like you have to print down, you have to show you compared to 3 places, use the average of those places, and then you can, and if you're out in California, you know, everything's expensive out there, New York, different places, it could be $1,000 to go rent something, right? And you can do this 14 times or 14 days out of the year. Okay, you can do it once a month and maybe twice, another couple of months. You can do it for 14 days straight. You see what I'm saying? But anything over 14 days, you don't get the write-off for it. But less than 14 days, you can do 14 days throughout the year. You have to put it on your calendar, put those dates on your calendar, right? That's a planning and organizing type thing. Just go ahead and have those, like all our meeting dates we have, they're already on the calendar. Put those on your calendar. Write out, you have to take attendance. Who was in this meeting, right? These are some of the requirements they're looking for. Who was in attendance? Your minutes. You do have to have minutes, right? What was discussed at this meeting, what things change, or whatever you have in your minutes. Those are the record keeping documents you want to have to cover your bases there. But you can do it 14 times a year. So if you did this 14 times a year at $1,000 each time, that's $14,000 coming off your taxable income with that one strategy. And that's a pretty simple one. Just got to keep your documentation. Okay, so your minutes, your attendance sheet, your comparables for those 3 places. That's pretty much it. Yeah, because your minutes is going to spell out everything, you know, what went on in that meeting, your attendance sheet, who was there, and your 3 comparables. You can sit there and talk to yourself if you don't know. I'm having a meeting, you know, it's just you. That's funny, but but it was a whole situation with the veterans certification. I know somebody who just got their veteran certification, and they kept sending back the operating agreement saying that we need to see in your minutes when you had your meetings and what was discussed and stuff like that. And it's just him. So he was like, he had to kind of write out, like he was having these meetings with himself. It's just him. And so he got approved once he went back and made those changes. And now he's got his certification, his veteran small business certification. But that's typically, if it's just you, if it's you and whoever, you just got to write it out in your minutes. Okay? That's an easy rule. Several $1,000s you can save just that alone. Okay, so that's what I have. Just a few strategies. There's an awful lot of them, but it ain't, but like I said, so much you can use per tax year. But whatever it takes to get you down to 0 or close to it, we'll make it happen. So, CEO Day, LOL, with myself. These were the changes that took place in our business today. CEO Tangeray Porter decided to do X, Y, Z, and da. That's it. They just want you to have like a paper trail and just cover your bases, have it on paper. Because ain't nothing the IRS can say once you got your paperwork and got stuff together. So that's it. So any questions? Any questions? I kind of try to go through that pretty.
Well, one of the questions is, please share how to set up a consultation with you, how to get on your calendar, please.
Okay, I put the link right in here right now. And I put it both places. I've seen it twice. Let's see. Let's go there. Okay, that's there. And I'll put it in WhatsApp also. So that one. Okay, got it both. WhatsApp and in this chat to do that.
I have a question.
Sure.
My husband, he just bought a car for me, but it's in his name, but I'm using it for my business. How do I go about doing that?
Okay, you use it for business, you use it for your business. It doesn't matter whose name it's in. You're the one who's using it for your business. Just track your mileage, just have all that other type documentation along with that card, tracking your mileage, things of that nature. So you'll be fine. So when it comes to, doing your taxes next year, you can still get those write-offs because you're the one using, your husband and wife. So that's, you're him, he's you, y'all one. So you'll be fine there.
Okay.
Yeah, you don't have to get it changing your name and do all that kind of stuff. Not necessary. Not necessary. Good question. Yes, did it go in? I thought I put it in there. Chat. Yes, Did everybody get the link? I see Esther, you posted in there again. Okay. All right. Any questions? Good questions. Good questions. Good questions. So we're gonna get organized. We get, like I said, we got 32 days. Let's go ahead and get those rest of those expenses categorized, make that a goal. Like Chanel said, to take 15, 20 minutes out your time, or whenever you just have some downtime. Like I said, it's so easy from a phone. I on that computer, I'll be like, I'm not doing this. But now I've gotten to a point to where it's easier now, because of the learned behavior and stuff like that. And it's just so much easier now to do it once a week, take a couple minutes once a week, and just got it, Tangeray. I got it. Oh, Dr. Nicole said it wasn't clickable. HTTP. Let me see. Where'd that go? Okay, it clicked for me. Did you get it, Dr. Nicole? Because it went to the calendar. Okay, cool. Yes. Get prepared, get ready. We don't have much more time. And I'm telling you, when we get in front of this, like, we're gonna be much more relaxed and excited about tax season, honey, because we're gonna be like, come on, tax season. I'm waiting on you. I'm in the driver's seat this time around. I ain't sitting in the back seat. I'm driving now because I've taken that step to get ahead of things and get to planning in advance. And this is definitely a new concept. Like I said, 2-3 years max, hearing about tax planning. So let's get in that driver's seat out the back seat, and let's drive ourselves to some tax savings and to some wealth. All right.
Can you kind of explain to them like how, or the rationale behind how the bigger corporations and companies and even small businesses, how they make all of this money and don't end up paying a lot of taxes?
Mm-hmm. Absolutely. That's funny because I just read it was Amazon. They just did this big thing because it was Amazon's first time in a really, really long time paying taxes. And that was like an alarm. It was like ring alarm, because it was alarming, because these big corporations don't pay taxes. And so the news, they were blowing this up like Amazon paid taxes for the first time in XYZ amount of time. But this is because this is what the 1% and the elite are doing. And it's not about how much money you have, because the IRS don't care about that, because they're going to get how much ever money you got. They're going to tax it regardless. But when it comes to tax planning, it's not about how much money you have or how much you make. You want to ultimately get to the point that you're keeping it. And so this is what they've been wise enough to do, is to sit down with tax strategists and people who know the codes and know the IRS laws, to where they can sit with them, or some representative of their company can sit with them and work this plan out throughout the year. I promise you, they're not waiting to December 31st of the year to start looking at what we're going to do with taxes. No, they got a plan January 1 coming in. They already got a plan. So this is how they're not paying taxes. There's some other strategies when we get into trusts and all those other kind of things. Those are other ways where people are massing taxes, because guess what? Trusts don't pay taxes, right? And so that's another, but tax planning is where that all begins to even put a trust in your tax plan. You still got to start with tax planning. And that's what they're doing. They are sitting down, getting ahead of things, and not, being in that reactive place, but being more proactive with the taxes. And that's why they're not paying in taxes. Trump get on live TV and tell us he ain't paying no taxes? Why? And it's legal because they know the game. They know the rules. Like, I'm not a football person. I don't know those plays. I don't know a lot about football, but I do know you have to know the rules to play the game in football or any sport, right? And so it's the same way with taxes. There are rules. That whole book of 70,000 pages I told you about, those are the rules. And in order to get in this game and play this game, we just have to know the rules. We have to know the rules. And that's why they're not paying taxes.
And so I'm stating this for the people who may not fully grasp it.
Okay.
So I got two things. So one, so when I bought my vehicle, I already had a vehicle. My vehicle was just fine. I was driving, look, that's so sad. I can't even remember what I was driving. I was driving a 2018 Land Rover Discovery Sport. And it was in my name. Like I hadn't done it in my business name.
Okay.
But for that year, I had done exceptionally well in my business, and I was going to end up owing $27,000.
How did you know that?
Because I did a tax planning session.
Okay.
And so when they ran the numbers, they said, this is going to be your tax liability.
Mm-hmm.
However, and this was in the numbers were ran in April. The numbers were ran in October. Our initial meeting was in April. So I had from April where they gave me some strategies. I put them in place, and then we met again in October. And then in October, my tax liability would be $27,000. Okay. And they said, now we have from October to December to work on getting this down. Okay. And so that's how I ended up taking advantage of Section 179 and a couple of other things. But through the purchase of the vehicle, they explained that in order for, if you go buy this vehicle, you're going to pay a car note, but you're going to get all your car note back because instead of you paying $27,000 to Uncle Sam, you're going to pay their car note every month and get to drive, and at least you get an asset from it. So it took my tax liability to zero. And so I just wanted to make sure they understand this, but also, can you explain to them, because they hear me talk about it, but I want them to hear you talk about it, what it means to live corporate life? Because a lot of time, I don't think that it's not something that we talk about, what it means when we're living corporate life, because I don't have to make $400,000 on my U.S. tax return to live a good life, because all of my stuff is building expenses.
Absolutely. Absolutely. And that's what I just said earlier. It's not even about you having to make all this money, but even the whatever amount it is, right? It's about being able, you heard the saying, it's not about what you make, but about how much you keep, right? You want to keep, I don't care if you make 10,000, most of that you want to be able to keep. And so a good quality of life is what I like to call it, a Zoe good kind of life is to me being a good steward. And that's what we've been talking about. We've been talking about all November for some reason. God has been really, every week been talking to us about being a good steward. So even this goes over into stewardship, right? Because if this money, we got the window up, and if this money is just going out the window, going right back to Uncle Sam or going wherever, then we got to look at, are we being good stewards, right? To live that good quality life that we have to be good stewards, because once we are faithful over the few things, the Bible said God will bless us with many. Doors will open, opportunities will come, things will just show up, right? But these are some of the responsibilities here that we have to take in order to be good stewards over our money. And shout it, say that, being good stewards. So I think that's where things begin when you're talking about a good quality life or living a good life, a corporate life, keeping that which you've worked hard for. You're building this business, you're putting in this time, the effort, and being able to keep that which we make. I hope that covers when you said the corporate life, the good quality of life, and those things. Again, we're not saying you have to, because government don't care if you make 100,000 or 1 million. They just gonna tax you accordingly. But it's our responsibility, because they're not going to do it. They're not going to tell us. Our responsibility to make sure. And if we don't know, that we get with the people that do know, right? And get the help and the assistance that we need in order to keep this money, so we can have it in our family. We can have it in building our legacy, right? Because I already mentioned the IRS has a budget of 11 billion. Like, they good. They real good. So keeping this money in our household and our legacy, building up our wealth for our family. And so that's the kind of life we want to live. A life of good stewardship.
Okay, this is my last comment. I ain't gonna say nothing else,
That's
y'all.
good. That's good. So
But
we're doing good.
We as educators, we're some really smart people. Like, we done made a profession of going to school, being a student of learning. And some of us believe that because we are good at learning, we're good at doing a lot of things. I always discourage people from doing their own taxes. And so if you could just give us a little bit about why TurboTax and Tax Act and all of those, Jackson Hewitt, and you know how we go to these tax services, or we'll download the app online and say, I talked to a whole bunch of consultants who will say, oh, I do my own taxes. And I literally want to choke them because I know that they don't know the 475 tax codes, nor have you taken the time to learn it. It would be like Camilla coming into a classroom to teach a classroom of kids. But go ahead and explain that for the people in the back.
That is a great point. Think of software, QuickBooks, any of those, online tax softwares. Think of them as like a calculator. You still have to put the right information in the calculator to get the right output. Wrong input, wrong output. I put 1 plus whatever, and I'm looking to get an answer for 4, but I put in 1 plus 1 in the calculator, I'm still gonna get the wrong answer. So even in that software, you still need to have the knowledge and know what to put into the software in order to know what to get out of it or what you want out of it. So discouraged big time trying to do your own business taxes, because you're going to leave so much on the table. And some of those softwares are very limited anyway in itself, right? I've even done comparisons because most people that come to me, they're using TurboTax, and I'll take their TurboTax information, one couple in general, and then I did it with our professional software. Free software versus, we pay thousands of dollars every year just for the license, right? For this software. And so, so it's going to be more sophisticated. It's going to be more robust. It's going to give you more opportunities for savings, deductions, credits, and things of that nature, where you're going to be very limited, especially if you're just doing like the free TurboTax or going through IRS. That's not even suitable for businesses. Right? It's not even suitable for businesses. It's going to limit you big time. And not to add on the lack of knowledge you may have about the strategies and the deductions that you need to even search for to go in those softwares. So definitely get some help in that area. You're a genius in what you do in education. That's your zone of genius. Definitely when it comes to your business, you want to make sure there's a professional that's doing that kind of, because you don't want things to come back later too. You know, you put something in there by mistake, don't understand it, and then it builds a red flag or brings up a red flag. So definitely, you definitely want a professional doing that. That's why we go to the doctor when we sick. I know some of us, we try to do these home remedies ourselves, but like finally we just give it up and be like, I'm going to the doctor. Get some of those good old antibiotics. You already know what they're gonna give you or whatever it might be, but you definitely want a professional with your business. Thought all of those questions were great. Very great questions, very great comments. Yes, all those were great. So yes, professional. So I've seen that most of you all have already booked the consultation. So that's awesome. And Tangeray wanted to know QuickBooks Online or QuickBooks Self-Employed. Which one should we use for business? I have self-employed, but I want to make sure I'm using the right app. Employed. Employed is good. Yep, you got the right one. You got the right one. Self-employed. That's a good one. You got the right one. And we got dollars to get and keep. Absolutely. And then not having the peace of mind, knowing that things are done by professionals, done right. And I promise you, another one of our late filers, her tax liability, because this is what my whole strategy, this is what I like to do when I'm doing somebody's taxes. I like to put in all your income documents, like put all your income in first, because I like to see what it is that you would owe before I start working my magic, right? So this particular client, that's right. Dr. D said if the IRS called, you have someone to turn to. That's for sure. Okay, you got some you got some backup. Okay, and so when I put in her income documents, I know because I did her taxes last year, so things change a little bit. She had a $30,000 or $32,000 tax liability. He was gonna owe 30-something thousand in taxes. And I said, oh, things changed from last year. You know, she got a refund last year, but some things changed and she had some extra income. See, that income can change on you real quick, right? She had a big boost in income. And so 30K. So I screenshot, I said, right now you owe 30K. She was like, whew. She already knew she was gonna have a big tax bill because her income just quadrupled or something. And so she was like, whew, my stomach started hurting when I seen that. And so I said, but don't worry, I haven't even got started on the expenses side. I just wanted to see what it was gonna look like on the what was you gonna owe. Yeah, my stomach hurt too. And so we were able to get her tax liability from 30K to 8K. Okay. She only had an 8K, like in her income quadruple. It did all kind of somersaults, Her tax bill was only 8K and she was flipping. She was just happy. Some people be like 8K. She was happy for the 8K because it went from 30K, right, to 8K. And yeah, so she definitely was excited about that. Oh my God, you're about to be like Dr. D Bill, but it's worth it. How to be like Dr. D Bill. Yes, but she was happy to pay me that bill because either she was going, I said, I'm gonna get me a t-shirt and it's gonna say, pay me or the IRS. Which one? Pay me or the IRS. They're doing a whole lot better than I am. Okay. And so she had no problem paying because she would have been paying the IRS a $32,000 bill. Okay. So those kind of things, saying I'm always paying her something. Oh, I got you, Dr. Nicole. I got you. But the benefits and the blessings and everything that come out about that increase, you're going to see those somersaults in your income and all those things going to start turning around for you. The income is going to come in. As long as you're putting in the work and doing what is necessary, it's gonna turn around. And we all gonna see somersaults in our income, right? So yeah, so those are some great points there. What else can I share? Let's see what else we got here. See if there's any other questions in the chat. Oh, that's it. Anything else you can think of, Dr. D? Any other questions? Any other questions? Situations, circumstances. And that's I'm still looking into that question you asked me too about the zero tax. Yeah, with that situation, because you know it is a lot of scams and stuff going on around taxes. So we'll look into that. Can I write off nails and hair? Yes. I put that in my health and wellness category. Right? Because when you look good, you feel good. And that really resonates in your spirit and your soul, like really. You know what I'm saying? And it does. Tandra said I'm in my QuickBooks right now, and it does something to your body, you know. So yes, that's in my health and wellness. Massages, hair, nails, brows, lashes, any pedicure, manicures. Come on, Dr. D. Come on, Dr. D number 2. I'm telling you, all of that, you know, definitely the wig. Mom, you got to order another wig. Hey, it's a write-off for me. It's a write-off for me, you know, because we feel good. We feel good when we look good. And so, yes, all that's a write-off, honey. All of that. Yes. Have fun with that. It's a write-off. Absolutely. Of course, you know, glasses, prescriptions, stuff like that. All the stuff you need for your business. Do you have a freebie with a list of expenses? Tangeray, we might got to get together on that one.
I was just about to say, come on, go ahead and run me some copy. I got the design. What's up?
Matter of fact, we're going to work something out. When your appointment is, we're going to work something out. See how God done put that together? Just like that.
I need to know.
Honey, that's a freebie. And I can do 100 of them. I can do 100 expenses, probably like off the top of my head.
Hey, I can't wait.
See that? Thank you, Lord. Thank you, Lord. That's a good freebie right there. See, I need you, Tangeray, in my life. Look at that. See that connection? That is awesome. Let me snap that so I won't forget that. For sure. That's a done deal. That's a done deal. Yeah, pretty much everything. Pretty much it comes down to, and I can say this, and I think it's going on 20 years, definitely more than 15. I've been doing taxes, and I've never had a brush with the law. I'm gonna call the IRS the law. I've never had a brush with the law, nor my clients. None of my clients, myself included, no, my clients had a brush with the law. But I've had people who've come to me who needed me to help them get out of situations, but they wasn't like my actual clients who taxes I've done. But when it comes down to it, and all of them, I was able to get them out and like they pay zero taxes because it just comes down to, because the IRS is nothing to be afraid of. They're men and women who wear pants just like us. But they just want to know, how did you arrive to that deduction? And only you can tell them, because the IRS says pretty much anything that you do in pursuit of your business is a write-off. So how you going to tell me I wasn't in pursuit of my business doing this? You just have to be able to explain to them how you wrote off that stainless steel refrigerator out there, you know, down in your kitchen that you just bought for $5,000. You know, you just need to be able to tell them, hey, when you have when you have your meetings, you have your parties, you have your meetings and everything like that. You have clients coming over. Hey, you have stuff in the refrigerator that your client's gonna need too. So a part of that can be written off. I'm just using that as an example, but that's just how you can. And all they can do is put their hands up. Like, they can't argue back and forth with you about that. So that's all. It's just not having that fear of them understanding them, because I was in that place too. Yes, wine can be gifts. All of that, right off. All of that for clients. That's what it's always have to be about, for your clients or employees. Clients or employees, things of that nature. And candles, yes, you can also get them labeled with your logo. And anything with your logo on, it's a wrap. You put the logo on the refrigerator, it belongs to the business now. You see what I'm saying? Anything with a company logo on, it's a wrap. For sure. It's a wrap. I'm gonna say less. Put the logo on. That's why you have them little stickers and you put on your car. You can just stick them on, take them off when you ain't driving for business. On and off, on and off magnet stickers. Put that Cricut to use. Okay. Absolutely. So that's good. I see most people have books. So we're gonna get this these last 32 days in and try to maximize it to the best of our abilities. And I think Cherie said earlier, she's notorious for or was that Chanel said she's notorious for purchasing cars at the end of the year. Sometimes that's what it takes, to keep you from giving it to Sam. Go and park it out there in your garage or something. Yes. Y'all been a good group. This has been some great questions. It's just a lot. So keep planning. Y'all look up plan. Keep planning in the forefront. And that's how you're gonna keep your money. How you gonna keep
Right, and if y'all looking to get some more good knowledge from Sister Camilla, come on out February 24th and 25th to Atlanta, Georgia.
Woo-hoo.
To the Millionaire Mindset Mastermind. Camilla has signed on, and she will be there. She will be a speaker, and she is going to help us once again with tax planning and wealth creations. So tickets are real reasonable, $249. Find your
Awesome.
own hotel to stay in. You can go cheap if you want to. You can go high end if you want to. But February 24th and 25th, as a matter of fact, let me go and give y'all this plug. At the Vision Board party, we're going to have 2-for-1 tickets. I'm just putting that out there for y'all so y'all know in advance. The special is going to be 2-for-1. Buy one ticket, get one free.
And I want to sponsor somebody, so I have to see, because this has been all month. God has been talking to us about sowing seeds and being intentional about giving and things of that nature, because give and it shall be given unto you, good measures, pressed down, shaken together, running over, shall men give unto your bosom. So it's going to be somebody from this class, and you'll be able to get 2 tickets for the price of 1. Come on, y'all. Give it up for Dr. D. That is awesome. Awesome. We're gonna sponsor somebody. So yeah. All right. That's awesome.
We still trying to work on Sister Cherie to come out to the live event. Sister Cherie, she be so busy. But when I say her sales game is on point, y'all better understand. But anyway.
For sure. For sure.
Thank you, Camilla. This has been amazing. This has been truly a good session. Y'all, if y'all have any questions, you know how to reach Camilla. And again, like I said, she will be one of the featured speakers at the Millionaire Mindset Mastermind in February 24th through the 25th. Cherie says she just looked at her calendar. So she might join us, y'all. She might join us. And y'all know we love our sisters and brothers in Atlanta. It's a nice it's a nice location where everybody can fly into, and a lot of my people live in Georgia anyway, and in the surrounding areas. So, come on and join us, and
Yes.
we'll also see y'all at the vision planning session on Saturday, December 2nd, 10 a.m. to 2 p.m. It's gonna be worth the time to stop, take 4 hours, plan out your year. Stop letting stuff happen accidentally. Let's create a vision, know what it is, and allow the Lord to do the work. He can't even help and work with you if you don't know what you're working towards or going for. And we're going to allow the Lord to put a little juice on top of it, because we can only dream a little dream. The Lord gonna put his sprinkle on top of it and take it to a whole different level. So I encourage y'all, if you have not signed up, get signed up for the vision planning workshop. Again, we're not cutting pictures. We're not doing magazines. This is the planning portion of it. We're going to elevate your vision for you. And so if you know somebody who that will benefit, get them to get signed up too. It'll also be aired on YouTube. And then about 100 people will be in the Zoom room with me. So if you're in the Zoom room, of course, I can talk directly to you. If you're on YouTube, we'll have a moderator who will be reading the comments out. But it's all about elevation in the year of 2024, prosperity and elevation, folks.
That's huge. That's huge right there. That's huge. Now we about to get and keep this money. Get and keep it. Okay. Okay. We're gonna do some big things. Big things.
Okay, so all right, folks. So if no other questions, we'll go ahead and end tonight's session. And I'm gonna go into the Facebook group and do a quick update in there, because I meant to go live earlier, but I got kind of sidetracked a little bit there. But this has been amazing. Again, I want to thank you, Camilla, for your expertise and sharing your time with us. And we'll see y'all next Wednesday. We still got a couple of more sessions. We got a few more treats. And I really hope y'all getting them 12 days of Christmas set up, because we got 12 days to go live for the 12 days of Christmas. And so I got some information coming out for y'all about that to make sure we on point. Okay. So y'all have a great rest of your evening.
And thanks to everybody who booked the consultation. I haven't seen the dates yet, but look forward to seeing everybody pretty soon. All right. Thank y'all. You have a good night.